Hey Alvin, so you wanted to know the advantages and disadvantages of taking VC or angel money before you have paying customers. So for my experience, when John and I started Customer IO, one of the things that we wanted to do as a proof point was at the time that we went full time working on Customer IO, we wanted to have 5 companies or 5 customers paying us $10 a month. And that was really important to us as a validation point for the business. And I think when you're building a SaaS business, it can be really helpful to have paying customers. Um, if you're if you're looking to take VC or angel money, having traction and having people actually paying you is a pretty good demonstration of traction. But having traction in general is really exciting, and it's good proof points for your business for VCs or angels. I think the downside or potential downside is that as soon as it becomes real, as soon as whatever thing you're making becomes a tangible thing with numbers, then the investor is less able to like apply their imagination to what it might be. And I think typically when businesses are consumer focused and they're trying to get really really big, one of the things they often like don't do initially is try to figure out how to monetize their audience. And they want to put like really, really amazing traction in front of an investor and not inhibit that growth by charging people money. For us, being a B2B company, it was totally different. When we initially planned to build Customer IO, we very naively thought that we would be cash flow positive in like a few months. In reality, it probably took a year or more, and hiring additional people before we were even close to that. I think one of the benefits of adding VC or angel money was that it enabled us to build a more complex product and a more sophisticated product, or a product that was more sophisticated to like build and maintain. I think the addition of outside capital allows you to think a little bigger, at least in the short term. I think without additional funding, you kind of need to work with what you've got, which might mean that the initial versions of your product and the initial market that you try to serve is necessarily smaller because you're trying not to bite off more than you can chew. So hopefully that's helpful. Hopefully that gives you some insights. If you have other questions, feel free to shoot them over. I'm happy to answer.